Hi everyone, welcome to our next slide for chart patterns. Right, we're still on chart patterns for wedges. So wedges, what are wedges? Wedges are simply same as triangles, but these triangles are now kind of slanted. They are now slant, or maybe it's like this. It's no longer like these triangles. Let me draw a proper triangle. Sorry, it's no longer a triangle that is not slant. Wedges are triangles that are slant, so we are doing the same thing again. So wedges have a noticeable slant, either upwards or downwards, right? So characteristics, they are seen by converging trend lines, right? We know how to draw trend lines. Declining volumes, right? As the price progresses through the pattern. I'll show you this trick when I'm doing an example. A breakout from one of the trend lines, definitely there will be breakout, but it's still the same thing. These are triangles. The difference is these wedges, they are noticeable when there is a massive, let's say after a massive movement of price, let's say there was a breakout. That's where you start to see these wedges, where we say the market is now breathing, kind of like there's a recession. Maybe there was a massive move, right? A breakout that you saw last on last slide. So maybe there was a recession here, then maybe the markets will continue or it will go down, depends. So we have what we call two types of wedges: a rising wedge, which means a rising wedge is like a triangle that is like this, and a falling wedge, which is like this, right? Notice in a rising wedge, let's say this market was moving, there was a momentum move of prices in a downtrend, right? Then there is a formation of this triangle, right? That's what we call a rising. So that's what we call a rising wedge. So as the trend line gets closer to a violent, definitely there will be a breakout again, because we call this the market is breathing. There was a massive move, then there is a formation of a triangle. So eventually there's a breathing, but in the end there will be also a breakout, which will okay, right, as the price is collapsed through the lower trend, right? So what do? We use the same technique. I place my entry here, this side. If it goes in this, I'll cancel this order. If it goes in this way, I'll cancel this order. Same technique. For this one, this is a triangle. A straight line gets closer, a violent, what do? Okay, same thing. So it's triangles are triangles. Don't get confused. If you see a triangle, those are good trades. So let's take it for example. You see there was a support line here. I just draw. I didn't want to waste time. But remember one thing, that your line or a trend line should touch shadows. What shadows I'm talking about? These shadows. These shadows. It should touch shadows. These shadows. I'm just emphasizing on. So it should touch shadows, so that if there's a breakout you can see it, right? So I drew this trend line. This is a resistance, right? We can see prices, they are moving but bouncing at this price, which is, you can see it's a concrete number, right? It's an exact number, $1.22. So most of the time, it's not always the case. These resistance sometimes happen on a concrete number or an exact number, right? Like this. You can see I took 3/4 of this. I was taking, at this point I took like there was a trade that I was analyzing. I took a breakout, so you can see it was a breakout. But for now we are not talking about breakouts. I've explained. I said these triangles for wedges, they form after a momentum move. So if there's a momentum move, you can see now the market is breathing, so there's a formation of a wedge, a triangle, right? It's not slanted, as you can see. So what do? We agreed that you come and measure your 3/4 from here to here. That's what we agreed, right? So which means I need this height, right? This height, you copy and paste this height, right? Copy and Control C, then you come with it. You want to measure an exit point, right? It will copy the same, so you just come and collect it and put here at the 3/4 mark, because I said you try to place your entry here at a 3/4 mark from here, from this side of a triangle. From here, 3/4 is somewhere here, so you should place your entry here. Your exit should be here. Then copy and paste again, Control C, Control V, then you take it, right? Let me place it like this so that we don't confuse each other. So you come with it here, right? Please, I'm illustrating. So what I'm saying is place 2 entry points this side, because we are anticipating, what is it, that there is a bigger move that will happen, an explosive. Then place another one this side, just above, right? So we are saying if it is this side first, maybe this price, you put your entry at this price at $1.282846. If you hit this price, you cancel this side. If it is this side, you cancel. Same thing. Yeah, so be very careful with this. It's very easy to understand. That's why I like these triangles, because I believe that in the markets people can see this, rather than those things that are coded and showed up. These are very easy to identify. So it is believed that everyone, if sees these kind of things, the markets will anticipate to move in your favor, right? Let's go to our next slide.